Looking for more investing options? Meet Cboe, the exchange that pioneered options trading. With exclusive trading products like VIX and SPX options, Cboe can help you trade in any market environment. There are risks associated with Cboe company products. Review the disclosures and disclaimers at cboe.com/US_disclaimers.
The views expressed on this podcast are those of the participants, not of Reuters News.
The US tariff war with China is not having its desired effect. Earlier this month, Beijing posted a record $1 trillion trade surplus. Unfortunately for US President Donald Trump, demand is being driven by countries outside of the US who are more than happy to buy cheap consumer and tech products from the world's second largest economy. This boom in demand for Chinese products is probably the most concrete sign that China's President Xi Jinping's Made in China 2025 plan has worked. But where does Beijing go from here? What will the next manufacturing phase look like? And how will the value of the yuan evolve? All this and more is in this week's Viewsroom. It's Amy.
And it's Una, and this is the Viewsroom, your weekly podcast that delves into the biggest stories in business, finance, and economics with a team of columnists spread out across the globe. Now look, no one expected China's exports to be so resilient. It's the big surprise of 2025. But Amy, I think we're seeing three main things play out here. At first, we've had this really persistent weakness in the Chinese economy. And so manufacturers are suffering, they're sending all their overcapacity around the world, and that's happening regardless of US tariffs. And secondly, there's this clearly a pickup in the round tripping of goods to the US via Southeast Asia, and that's effectively Chinese manufacturers dodging tariffs. And third, and I think this is the point that is massively underappreciated here, is Chinese companies aren't just producing cheap goods anymore. They're innovating and they're producing desirable stuff like batteries, cars, pharmaceutical goods, robots, and also drugs. And this is the Made in China plan in action. So I don't think it's not just one thing, Amy. It's like all this stuff is propping up the surplus and Chinese economy in a big way.
So I had sort of two questions about this, Una, because I think that is very well explained. One is we're in 2025 now, which you would assume that there has to be a new plan for China. But the other thing is, I just think that probably the most interesting thing is it seems like this Trump plan to sort of really hurt China has not really worked. Is that fair, or am I missing something?
I think it's still too soon to tell, because I think we need to watch and see how many other countries take the lead from the US push against China. And we are seeing this rising protectionism come to bear. And so pretty much on the same day that China had this $1 trillion trade surplus, they also made a big call to the world to not subscribe to this rising level of protectionism. So I think the jury's still out.
That's very interesting. Well, look, we have two China experts on our team, Robin Mak, based in Hong Kong, and Ka-Sing Chan, also based in Hong Kong. So Robin, Ka-Sing, you are very welcome to the Viewsroom.
Thanks, Amy.
Thanks.
So Ka-Sing, can we start with a history lesson for our listeners who have not been maybe paying attention as much to this Made in China plan? When did Made in China 2025 begin?
Hi, Amy. I think it's just a very good idea to understand the history of this plan, because it will. It is good to go back to a bit of history so that the people outside China can understand where these plans come from. China's industrialization only really began in 1979, but for most part of the next 3 decades, when we talk about Chinese manufacturing, we were talking about the world's factory. But we were talking about this low cost goods like textile, toys, and parts, which means a big part of the value chains was in the brand holders and in the US and Europe. And Chinese factories are making very, very little. One very good example is the iPhone. In 2010, iPhone 3 was sold in the US, for example, for $600, but only $6. 1% go to the Chinese factories.
Wow.
And even lower parts of smaller amounts go to the millions of factory girls that assemble the lines. So the Chinese were thinking, no, we can't go on like this. Something has to change. That is why Made in China 2025 came into being. the plan was announced in 2015. At the time, the Chinese were, because the Chinese have so many different plans and then, but this one particularly has incurred that stoked a lot of pushback from the U.S. You immediately, if you look at the timelines of the chain of events that happened, after that was announced in 10 years ago, and then Donald Trump's first office began, he began to unleash his first trade war on China, and then the various kind of trade section is a very different from what's in the past U.S. presidents have done. In the past, for example, Obama was saying that the Chinese currency was undervalued, and then the Chinese manufacturers were stealing our intellectual properties. But now the narrative has changed. That's the Washington and then countries in the Europe also now wants to see is the Chinese technology is getting too big a lead in the tech race.
So, Robin, what's your view on this? I mean, how should we interpret China's trade surplus? Is the economy experiencing a revival?
Yes and no. I mean, in some ways, there's a huge contrast just because you have, all engines are running and going full steam on the export front, on the manufacturing front, and those numbers are clear. But on the other hand, you have very weak domestic demand. Retail sales came in at a 3-year low. Also, you've got a property market that has been in free fall for the past few years. And in some ways, this contrast is a reflection of just some of the really deep-seated imbalances of the Chinese economy, right? And there has been a very, at least officials are now really trying to focus a bit more on propping up domestic demand and sort of a bit less emphasis, on investment and manufacturing, and just kind of really bolster Chinese consumption and domestic demand, just to balance out the economy a bit. And I think, that's the right way to go. But at the same time, plans like Made in China 2025, it is, primarily a manufacturing blueprint. It's an industrial blueprint. That is the priority of the Chinese government. They do not want to get left behind in AI, in biotech, in robotics, and they will just keep pushing full steam ahead for the next 10 years
And what
and
about
more.
the innovation? I mean, how taken aback you specialize in all of our tech and AI coverage. I mean, how taken aback are you by the sort of speed and innovation in China and the exports?
Yeah, I mean, I think, as a whole, it's quite clear that Made in China 2025 has been very successful. The country has made extraordinary progress in a lot of sectors, including electric cars, in renewables, in biotech, in ships, and even in things like satellites and rockets. And the two areas I think that, they did fall short is in semiconductors and aviation. Now, for semiconductors, it is really important to note that, there has been extraordinary progress over the past 10 years, particularly, since 2020, I think, when the tech and chip war really started. And that has really accelerated a lot of Chinese chip makers. And they did, greatly expand their manufacturing capability since then. But it's the high-end chips that, the country is still struggling to break through. And I think that is going to be the focus, the next focus, Amy, when you talked about what comes next. It will be this area for sure.
The other thing I thought that Una touched on at the start, which I just thought was really interesting, is that maybe, saying you can't quite tell whether the trade war is really having an impact on China, just in terms of demand, just what we're seeing in terms of the way other countries are behaving and buying from China and circumventing tariffs and things like that. What's your view on that? Do you think that China is sort of maybe through the worst or has sort of managed this very well, or are there still some very big risks for kind of demand, even global demand for their products?
Yeah, Amy, you mentioned at the beginning that's the China has recorded a 1 trillion trade surplus in the first 11 months alone. This is record high. This is a sensational figure, but what is more important, I think, is that China has been able to rack in such a big amount of trade surplus year in, year out against most of the trading partners. And for this year is particularly stunning. This is because that's on the backdrop that 2025 is is considered as one of the most, if not the most volatile year, unpredictable year for Chinese manufacturer. But still, they were able to pull up this result. And it is not only about low-end goods or low-cost toys. They also made a lot of progress in higher end products, just like integrated circuits, which include lower grade chips. So it is a proof that's made in China 25. China, by the way, China has not stopped using this term, but it doesn't mean that they are not doing it. It is as proof that China has been successful in upgrading its tech know-hows, and it makes its export more resilient. And more importantly, exports has become a very reliable way for China to beef up to support its economy in the bad times, and also at the times when the governments may be having a bit of a fiscal strain. So this is, I think, what is the biggest takeaway from the experience last year.
But what about the geopolitics, right? Because I mean, it's all very well, like China excelling in biotech and striking deals with multinational companies to sell their innovative pharma products to the West. But now the US is saying things like biotech is like a sort of a national security thing. I mean, how sturdy is it, or how reliable will it be for China to rely on high end exports?
Yeah, I think resilience is the name of the game. That's just China is no longer relying on one thing. It can rely on both things. And then it also is as diversified is we export to different kinds of the different trading partners. So it can do the diplomatic gaming. So okay, if the US is not buying, then they can sell more goods to Vietnam, and then convince Vietnam to transship those things to the US. So this makes its strategy more flexible and difficult to beat.
I think it's really clear, though, that we haven't seen the pushback yet from from the US on transshipment. So transshipment was a word with like, so when Donald Trump said penalties on, or tariffs on all the South penalties, so tariffs on all the Southeast Asian countries, basically in all the letters he said, and if goods are transshipped, then the tariff will be something like double. And what we haven't seen yet is the US real effort to try and police that transshipment. Because what we could see in the surplus numbers is that the exports to Southeast Asia have gone up while the exports from China to the US have gone down. So clearly there is also a lot of transshipment going on as well.
So, Kassing, can you talk about a little bit just about the impact that this is having on the yuan, and basically, this is, are we expecting the yuan to strengthen? What is the sort of view just in terms of, because obviously that would really help China buy things externally, right?
Yes. I think if the US dollar has weakened a lot this year, and especially against currency like the euros and the yen. So all in all, effectively China's transshipment obviously play a crucial role in this trade surplus, but China's effective currency depreciation against other currency out of besides the dollar also help its exports to the countries like the trading partners like Asian and the Europe. So this is why we can see a growing chorus or going. Many people are now saying that China should revalue its currency. That the yuan is devalued. So and I think in a way a stronger yuan will be beneficial to China's long-term plan to boost consumption as well. Yes, of course, a strong currency hurts its export, but it's also increased the buying power of the Chinese consumer. So this is, so it will be up to the Chinese government to decide what is the best part of what's the best part they can do. But I think going forward, people will be definitely ask the question. Well, you guys are very good at doing plans, right? You did Made in China 2025, but how about the plan to boost consumption? And then a strong currency maybe will be one of the answers to this.
But it's actually interesting because if you have a strong currency, but you have really good high-end innovative products that the world wants, then it doesn't really matter that you have a strong currency because people will buy it anyway, right? So that's kind of maybe like the holy grail of where this all goes.
This is kind of what happened in Japan in the 80s when the companies like Sony was selling the high-end products, which is, well, I mean, that was the Walkman, right? Those the kind of things. And then, but now, then what happened is that the Japan government is also facing a lot of pressure to reevaluate the yen, so, which is actually what happened. And then we can see the consumption, the proportion of consumption in the Japanese economy rose quite substantially in place of export. This is, I think, that rebalance act that Beijing is also want to see for a while.
I guess the only caveat to the Japan China comparisons is that it does feel like on a geopolitical front it is much messier between China and the U.S. today, and also what China as their exports become much more competitive, particularly in advanced manufacturing goods, there's going to be a lot of pushback, not just from one country, the U.S. There will be pushback from Japan. There will be pushback from Germany. There will be pushback from South Korea as well. So I think in some sense, it's a lot tougher today for China, to do what they are trying to do than it was for Japan, I think, back in the 80s.
Yeah, and I think you have to look back to cars, right? The EVs. So it wasn't even Trump that banned Chinese EVs effectively from the US. It was Biden. It was the Biden administration that did that. And so the fact is now is that US car makers don't compete with Chinese car makers in the US. They compete with them in the rest of the world, but that space to compete could shrink. So I mean, I think these are some serious headwinds that China still has to manage. So like full points for kind of managing like the trade surplus for now. But I think everybody will be watching to see if that continues to rise at the same pace or not.
So yeah, with all eyes on China, then Robin, what are the most exciting innovations then that we could expect for, I don't know, I don't want to rename their new plan, but China 2050 or whatever it will be called. What are we likely to see? Because yeah, as you said, they're in every space that the US is strong, they are very much trying to compete.
So for sure, there is currently a big push into humanoid robots. So just manufacturing robots on factories. China is really leading the world on all metrics in terms of numbers of robots employed and sort of the manufacturing capabilities. So that's one area. I mean, the second one, of course, it's will also be AI. We've seen that China has been punching above their weight. A lot of their models are, among the top performers globally, the open source models. And I guess the third one is, I mean, this might not be, the sexiest, hottest innovation, but just in terms of infrastructure, right? There is a huge emphasis in the US and Europe on upgrading, electricity grids, renewables, and China has all that tech, when it comes to, like renewables and transmission technology and things like that. So I think that it will also be an area that there will be real demand for Chinese products.
Well, the more successful China becomes, it seems the angrier Donald Trump becomes. So it will be very interesting to see how this all pans out. But Cassie, Robin, very nice to hear all your thoughts on this.
Thanks.
Thanks for tuning in. This podcast was produced by Cheryl Pena in New York and Gregory Garner in Toronto. You can listen to a new episode of The Viewsroom every Thursday on the Reuters app or your favorite platform. And don't forget to tune into our sister podcast, The Big View, every Tuesday, as well as the other great podcasts from the Reuters team. If you like what you heard, please follow The Viewsroom and let us know what you thought. And check out our views on the biggest stories in business and finance every day at breakingviews.com and Reuters.com.
When your options are limited, so are your opportunities. At Cboe, the global exchange that pioneered options trading, we offer more ways to move with the market. From VIX and SPX options to global market data solutions, Cboe helps investors diversify, manage risk, and stay ahead of whatever the market does next. Cboe. Life is better with options. Your investments could be too. There are risks associated with Cboe Company products. Review the disclosures and disclaimers at cboe.com/US_disclaimers.